When you get an SBR question, you will have a question for, let's say, 10 marks. And there will be one standard that looks like a hero of this question. But we also need to know what other standards can be triggered by the scenario so that we would be able to get not just 5 marks for IFRS 5, but the rest of the marks as well. First, we do expect IFRS 18 to be tested. This is the standard that talks about the new way we present our financial statements. So, namely, you might be asked to comment on where loss from discontinued operations or profit from discontinued operations will be shown. The answer would be that it's shown below the profit from continuing operations, so between this and the net profit. I would remind you that we are going to have operating profit, we are going to then have share of profit and loss from associates and joint ventures. Then we will have the next subtotal, profit before financing and income taxes. Then we will have interest, then profit before tax, then we'll have tax, then profit from continuing operations, and then profit or loss from discontinued operations. So we are going to have several categories. This is one thing. Another thing is that if you are going to talk about IFRS 5, you need to pay attention to when this very asset became classified as asset held for sale. And this would be important because you stop charging depreciation on that very date. So when we are saying that the sale has to happen within 12 months, it's not within 12 months from the reporting period. No. It's 12 months from the classification date, and the date is super important because this is when you stop depreciation assets. So you stop increasing the cost, the expenses in your P&L. And then if we don't classify something as asset held for sale, so for example, because the buyer has not been located or has not been actively looked for and so on, still, the fact that we might be selling this very asset shows us that maybe this is an impairment standard. So maybe we need to apply IAS 36 and test these very assets or some other assets associated with it or with this group of assets. So this is a sign of impairment. Another thing that can happen is that we might be asked to talk about IAS 37 provision. Well, we won't be asked, but we need to guess. Why? Well, if you are going to sell this very asset, even if it has not been classified as asset held for sale, but there is an estimation that it won't serve you as long as you originally planned, then this means that dismantling or site restoration is going to start sooner. This means that this very cost, say 1 million, is going to be discounted not for 10 years, for example, but rather for 2 years only. And this will lead to the increase in provisions and increase in expense for unwinding the provision. Okay, so we've discussed IFRS 18, where it is located, IAS 36, that this is an indicator of impairment. IAS 37, well, this will make us recalculate provision. Of course, we're going to look at IAS 10, so we're going to look at whether this is an adjusting event or not adjusting event, that we have located the customer later, or that, let's say, the asset was sold and so on. And on top of that, you would need to know what to do if your asset is no longer probable for sale. So if something has changed in your plan. And IFRS 5 is tested pretty frequently. So it is important to focus your attention to this very aspect. Thank you for being with me for this episode. My name is Lily Kirilenko, and enroll into my course on SBR that has visualized theory, that has lots of quizzes and lots of my feedback, and has me personally marking and commenting on your assignments and mock. This is something that will help you pass sooner, faster and easier, with more time left for your loved ones. Bye!